Very good evening, everyone. Good evening. I know all of you are waiting for dinner, which is outside, but we'll try and keep it short and also very, very insightful. I can see the faces. We'll ensure that this is very engaging. So you would have heard in the current world two terms, data and dollars, used most frequently. And along with data and dollars, two other words which are used most frequently is technology and finance. So we're going to combine data, dollars, technology, finance to give you a perspective of how CFOs, the big brother, have expectations from CIOs who may consider themselves big brothers but also are equal brothers, and we'll understand how in this current world, which is volatile, which is ambiguous, which is complex, to understand how things can flow. What is also happening today is in current world, everyone talks about innovation. But innovation alone may not give you results, because what is required is a seamless integration between how CFO and the CIO thinks and works. So we'll start the panel discussion, and the first question I'll ask from Suparna, since she's just sitting next to me. What do you think in the current VUCA world are the expectations for CFO from various CIOs? And this can be across various domains. So you can talk about from a business strategy perspective, from cost optimization perspective, from risk perspective. What do you think are the expectations?
Thank you. It's a question which is very wide, covering many points that you mentioned of. To begin my answer, I'll say that we've all heard this song, and there's a very common sentence which is very relevant. Kal khel mein hum ho na ho, gardish mein tare rahenge sada. With these words, I would like to tell the role of a CFO, which is to prepare an organization when we CFOs, move into other roles or retire or, do something else. We have to create an organization which is very, very resilient, which really addresses the risks of a VUCA world. And in fact, just while I was, having a side chat over a cup of tea, so Samir mentioned of a new word which has replaced VUCA, and which he said is Bani, and I'll request him to mention about this when he talks. And it actually shows that there's learning at every step of life. Now, having said that, we all know that we have a lot of risks to mitigate. We have to help to steer the organization in a way where we are relevant for the group, for the organization, for the customers, and we are creating a brand for the organization and to be there for in the times to come. So, with all that, it's very important for us that we have the right strategies in place. And when we say the right strategies in place, it's very important for us to use digitization, to use something which is relevant for the organization and which helps us taking the right course of action for the organization. Talking of cost optimization. So, cost is a very important factor, all of us know, and really doesn't need deliberation. It is very important for us to see how we are able to maneuver the costs and give value to the customers, and of course to stay in the market. Like in one of the earlier panel discussions, we had to take decision on sales, which was mainly with respect to credit. But today, it's just not, it's about giving credit to a customer. It's also seeing at what cost we are able to sustain that business. And digitization and data is very, very important for us to get the right estimation of costs, get the right input of cost at the time when we have to quote to the customer, and also see that we are able to sustain ourselves in the long run. And when I say sustain, it is just not sustaining ourselves in terms of cash and profitability. It's a long-term sustainability of the brand in the times to come. The third thing, which one?
Risk management and innovation.
Management. Uh, we are all operating in this very uncertain world where there's a lot of risk in everything we do, the regulatory risk, the customer risk, the brand risk. There could be fakes for a product, there could be, our technology can be saturated, it can be copied. There are many kinds of risks. The expectation from technology and digitization is to change rapidly. Suppose we are seeing some changes in the environment, we should have a very, very agile system or agile technology system which can quickly help us adapt to the changing needs of the market. So that's very, very important for us in terms of how we can mitigate the risks and how we can, have again a sustainable brand for the organization. And I think there was something else that you talked. Yeah. I think very important thing which technology has to offer to us is the accelerating innovation. So all the other 3 points that I mentioned, that all has innovation, time to time, step by step. And with whatever the organizational objectives are, if we have the right data, the timely data, and the agility to embrace those changes, that is itself a very, very important, innovation that we can quickly adapt to. And in fact, this is all, uh, small things and, put together, all of them can help the organization going. So these are my 2 cents on the question which Amit has.
So thank you very much. Looks like there are infinite expectations which CFOs has today with the CIOs. Having said that, these infinite expectations are very difficult to manage, and there are challenges in terms of alignment between CFOs and CIOs. So I'll request Mr. Madan, Sameer Madan, just to talk about how do you think CFOs and CIOs can align better, because data and dollars are two opposites. Saving, one talks about investing. So how do you think this alignment can happen?
Sure. So I'll start by saying that finance and IT are two sides of the same coin. Both have to coexist. The thing about the competition of dollars versus the benefit, let's put it benefits, is only there if you don't realize that in modern day business, data is something which is paramount. It's like a tool of your trade. A company which doesn't have data and doesn't know how to mine data into actionable insights will not survive. The competition is cutthroat. You'll be thrown out of business. So the coordination or the collaboration between the CFO and CIO is indeed a little bit of a tricky thing, a tongue twister as well, but I don't think there is any option. The CFO has a bird's eye view of whatever is happening in the entire company, the industry, the country, and geopolitics all around the world. And I think many a times the CFOs don't take the lead in engaging with other support functions, specifically IT, and tell them what's happening all around us, and also hear them out. Historically, CFOs have been inward looking. They're not really able to communicate very well. So the more we talk with our IT folks, the better it is. Tell them that we need this solution. They will say, okay, if you need this solution, I need $1 billion. Now, obviously, I don't have $1 billion. What can we have as a wire media to reduce the cost, yet get what we want? Put it in your plan of records, which is basically setting money aside for future years. So the key over here is both of us should appreciate the world of the other. The CFO take the lead not only to teach the IT folks, as I said, but also HR, also every other support function, also your production guys, also your sales guys. So the more we communicate with every employee, every C-level executive, the better it is. Those days where, this is CFO's role, this is HR's role, this is CIO's role, this is the sales guy role, is gone. The market is moving at such a fast pace that the business models are getting extinct every 3-4 years. The average time a company spends in the Fortune 100 is now 17. It was 38 just 20 years back. So data and data mining are key. And obviously, IT folks own the mantle to make sure that the company is generating data. And data is not just coming from your ERP, which is generally quite data mined, and we have quite a good insights of it. But all the disparate data lying around in our Outlook, in the outside world, the simplest example I can give you is, I was speaking with my IT guy who sits in the US, that how can we actually get a tool which can scrub the financials of my competitor? There is a company called Refinit, which tracks every listed company in the US. They have beautiful models to scrub the data for every listed company. Why do I have to have financial analysts to kind of do the product line gross margin analysis of my competition? Because that's my bread and butter. I have to see what my competition is doing. So the more we talk, the more we'll find solutions. Yes, there will be a chicken and egg thing in terms of what is the cost, is it worth it, is the ROI there? And that's why we have to work with them to tell them what we need, work with all our vendors to see what solutions there are in the market. And lastly, don't be seen too much while having coffee with folks in finance. Have coffee with folks outside of finance.
Thank you very much. What is also happening today is the business strategy is very well aligned with the data strategy, which was not happening a few years back. Because of which, every organization related to data has become a technology organization. And all top companies in the world are the technology companies. Initially, the road to the CEO used to be CFO to the CEO. Now the road to CEO has become CIO or CDO to a CEO. So in this current stage, how do you think there has to be a coexistence between not just a CFO and the CIO, but their roles have become similar? And I'll request Nitin, if you can just throw some light of how this world has become one, and CFO, who used to be CAs, and we just heard the partner from ENY, who was a CA, talk about Gen AI. So how do you think the world is coming together?
Thanks, Amit, and thanks Strategic Inc. for calling me here. I represent technology field, but trust me, since the start of this session, Joginderji started, and then the eminent panelist before this, Prashant, everybody spoke. They all spoke of technology with the same vigor and flavor that if you sit in a CIO conference, same topics will be discussed. The same things, cyber security we spoke, data analytics, generative AI, data, business intelligence, and anything and everything that we spoke is the same thing. So what I'm trying to say is that erstwhile days were there when there were silos. Finance was one silo, IT was one silo, and there was less talking, like rightly said by Mr. Samir also. Now we are at a cusp of technology where it's all interconnected, and everybody speaks the language of data. Data is the new soil, oil, whatever we say. But that's true, that everybody now speaks of the language of data, and CFOs, CIOs, they are talking of the same language. Now, where CFO would see the involvement of a CIO, CDO, who could be 3 to 4 areas I'll just highlight. We talk of the business intelligence and analytics. So if we need to, the talking language is data, then it should be there for the decision making also. Now, for this data to be there, there are many silos in the organization. We have CRMs, we have DMS, we have ERPs, many other things. They have to be culminated at a single source of truth, which are given by things like data lake, data warehouses, and then the business intelligence happens. And we heard of the people doing it as a citizen development in the finance team also. So again, there is a cusp of technology with finance and IT. Then this needs to be cleaned also. Then there are other things which IT probably can do as a master data management or things like that. Second is the automation. We again heard in the previous panel discussion, we spoke of RPAs. RPAs or intelligent document processing, like in one of the cases we are doing PR to invoicing, the entire cycle is done through RPA, and the invoices which are there, the scanned invoices are intelligently processed and converted from OCR to a decision making. So what it does is, it saves a lot of time for the finance department. Their non-value added activities or the repeated tasks are automated, and this gives ways to their own value addition and doing other things. And again, probably here IT can complement a few things which finance department does. The third is, again, we have talked a lot on this, is the cyber security element or the compliance part. Now we have a new law coming in, and ESG is again one of the thing. Many of the finance people are also doing compliance part from that. So in absence of a data which is monitored and documented, this becomes a futile or a half-hearted exercise. So guardrailing your company's data in a secure fashion and generating the data for compliance and meaningful decision making. Again, the IT folks there can do that heavy lifting of generating data, processing it, and in some of the cases, guardrailing within the ecosystem. The last and the fourth element, which I feel is the exploitation and exploring of new age technologies like generative AI, and we saw Prashant speaking of a lot of use cases around it. Again, some of them are self-intuitive and some of them may need customization, integrations at the back end. Again, guardrailing within your ecosystem. So you would have your own data sets and you would have external data sets, and both of them needs to be converged for a visualization or a prompts or a chats discussions. But at the back end, the integration can be done, and the front end, the finance people can be benefited. So these are some of the convergence I see between CFO and CIO, and happy to see that this is more or less like a CIO conference only.
No, absolutely. The world is converging. As most of you would have seen, post-COVID, every organization focused on being resilient as well as increase agility. Because of that, there was a lot of focus on innovation and new products. A lot of investment happened, a lot of hiring also happened. But last year, we saw that a lot of companies who overhired during COVID have also laid off a lot of people. As per an interesting inputs from Gartner, they say that the investment in IT has gone down from 5.1% of revenue to 2.6%, almost half. What it does is it puts immense pressure on the CFO, because while they would want to grow the top line, they're also very focused to grow the bottom line. So the focus on margins have gone up. So one very important key aspect which CFO needs to focus on is return on investments. And that's what I'll ask Gaurav, if you can throw some light on how CFOs can educate, influence, guide CIOs to focus on ROI, which is the key KPI of a CFO.
Thanks, Amit. Thanks for asking this question to me. In any case, I am one of them who becomes CFO to CEO, so not one of them who's become CIO to CFO. So you rightly mentioned, I think while taking any decision to make an investment, we do cost-based analysis. I think Samir has touched upon it, and we talked about a lot of things. But what is important is to look into the overall perspective. Sometimes when we take decision of investment, we only think of a few aspects of it. As in CFO, sometimes we missed out of some of aspects. So for example, if we talk about stakeholders, what do we think as our stakeholders? It can be many, many stakeholders. And if we think about all the stakeholders, probably we'll be able to take a right decision in terms of investments and return on investment. So you have to taught them that you have to look after all the aspects. For example, shareholders are our stakeholders. Our vendors are our stakeholders. Our bankers are our stakeholders. Employees are stakeholders. Customers are stakeholders. Even the society and the government is as well the stakeholders. Problem is that we only talk about few of them, and they also talk about few of them, and we don't come to the common page of return on investment. So return on investment is not talk about only the shareholders' return. They don't talk about only the returns for the customers. They don't talk about only the returns for the employees. Probably we have to talk about all stakeholders. I think That's what we have to broaden our aspect, and we have to have a hand-to-hand discussion with the CIOs, so that we can both take a right decision in terms of return on investment. So that is very important in this particular decision making. Rather, if you really ask me, as a CFO, I always used to think that, I have to save costs. Bottom line is always been target. But the point is top line and bottom line has to go hand in hand. And if you don't think about it, it will not going to work. Second, I think we were discussing just outside about data privacy. Probably most of us know about the data privacy. The new law is about to come. The government has already tabled it, but it is not yet approved, but probably it will get approved. Either, I don't know whether all of us knows or not, like a GDPR, there's a lot of huge cost which has been inverted into it. And if it got imposed on any of the companies, they can become even bankrupt. And unfortunately, I was also part of an reinsurance group, and I was attending one CEO conference of IIDI, and there we were discussing that whether insurance companies are really interested in India to cover the data privacy risk or not. And unfortunately, none of the insurance companies has said they can do it at this stage. And that is what we have to think about. Return on investment is not a direct return. We have to think about a larger perspective as well. For example, your CIO is saying is to make an investment in some sort of tools to be implemented for data privacy. And we say, no, I don't think it will going to give me a return on investment. But you have to think, even if financially you have to think that what will happen if even a single penalty will be imposed, you may become a bankrupt. So the point is, think broadly, think all aspect of it, make CIO also educate about all aspect, and then probably you can able to take a right decision for return on investment. That is very important aspect of it. Thank you.
Thank you very much. Now,
Amit, if I may add,
please.
I think what has happened in companies to kind of further enhance the collaboration between specifically CFO and CIO is the way our incentive compensation is structured. As he rightly said, for example, the company where I work, so we have the top line growth separately with a certain percentage, bottom line growth, and then a growth differentiated between farming and hunting. So farming is getting additional revenue from the same customer, hunting is getting a new customer. And as he rightly said, ROI just as a percentage is not the only measure. Tomorrow you may be out of business. So that is also a return, that in case you have a penalty in one of the insurance companies, God forbid, you will be kicked out. There are enough examples. So it has to be holistic. I think we have to work with every stakeholder to have a common metric across for the C-level executives for your compensation. When you have money doing the talking, collaboration does become simple. And just to everything, BANI stands for brittle, anxious, non-linear, and incomprehensible. Now, brittle means, it's brittle. Anxious, we're all anxious because the business models are changing. Non-linear is my favorite. The way the world is now becoming the business world, we only had a V-shaped recovery and a U-shaped recovery. Now we have a K-shaped recovery and a W-shaped recovery. God knows how many more alphabets will be, invented just from the recovery perspective. And I is incomprehensible. That's why we need to have data which we can comprehend and build a story around it. As CFO and CIO is, the CIOs will give me data. I will build a story around that data, or I'll build a story and put data around it. So that's how the CIOs and CFOs will function.
Absolutely. Thank you very much. Another area where we talk about ROI, every CFO wants a quick ROI. I invest today, let me get the returns tomorrow. Having said that, there are a lot of organizations which are capital intensive, which means the returns will come in future. It may take 5 years, it may take 10 years. If I ask this question to Aditya Mishra, who is part of a company called Static, which is creating EVs ecosystem across India. Now, their business is capital intensive, so they need working capital. Having said that, since they also put EV charging stations across various locations, their business is dependent on real-time data insights. Their business requires personalized real-time data decisions so that they can put the charging stations accordingly. And number of charging stations is also determined by the traffic as well as the number of cars available. So, sir, in your world, how do you think business models needs to be updated and the relationship between CFOs and CIOs help in developing enhanced new business models, specifically in this area where the working capital requirements are more and the focus on capital investment is high?
Sure, thanks so much, Amit. What I'm enjoying in this role is not being a CFO. Okay, so which basically means that I'm actually being a CIO, partner to the founders, and trying to do everything. Now, let me just give you a little background to my answer, then you'll understand the context. I've had the privilege of working with large global conglomerates, large Indian conglomerates, and then finally transitioning to a startup like Static, where I'm working for some time. Why did I say that? Because in previous cases, when I had to look for an IT solution, the discussion used to be on ERP, and ERP. That's the three discussions that we used to have within our IT world, right? So, and that is because, these big global companies used to acquire companies everywhere. And so they used to have some small ERP of some version of some SAP or some version of Oracle. And suddenly when you're doing a global consolidation at the end of the month, you are trying to solve for ERP version 1, ERP version 2, ERP version 3, and consolidating and trying to produce a data for a global conglomerate which will report to Wall Street Journal, right? So the challenges were different. So, and when you want to do something, it took enormous amount of time to do this thing, right? So that's the problem you were solving there. Just to get a simple tool to kind of implement in India, I had to prepare a 3-page memo, give the explanation as to why you require, what kind of investments is required, why you're looking at a local tool, not a global tool, how is it separate. And by the time, the government changed the policy to something else, so that tool became irrelevant. So go on, that is. Now what happens is very different, right? Now if you look at what is the new age startups doing, new age startups are looking at, okay, where are the maximum number of manual activities or processes that is happening? And how do I enable tech to disrupt that, right? Let's take, for example, in our case, what we are looking at when we talk about business model. We are, for example, we are going to set up EV chargers somewhere, right? So, which means that these are a high frequency activities for each EV chargers. Maybe you'll set up 100. So you need to monitor 100 units of activities for setting up EV charger. Now what happens? There is a factory. It has to be dispatched. Logistics has to pick up. It has to take to an X location in Delhi. But before that, EPC work has to be done. Electric cabling has to be done. Grid connection has to be taken, application has to be made, right? Suddenly, if you start breaking these activities, you will see there is 33 or 35 micro level of activities which is happening. And where the delay is happening will actually impact how much time you take to install that EV charger, right? Because at the end of the day, you've committed to a customer in 30 days, you get it started, right? Just to say that, contractor ne nahi lagaya, does not help. You need to know the cable which we estimated was 100 meters, actually took 300 meters, and the grid connection took so much time. We need to know out of that 33 discrete steps, which took the longest for Delhi, which took the longest in Chennai, which took the longest in Bombay. So that level of activity, when you need to track, you are almost like, what I call as the Amazon kind of tracking, which means the moment you ordered, sir, your order is in the warehouse, it's getting packed, it's got collected. You need to do that same thing for your own business, which means you need to develop these insights, you need to develop technology, you need to develop these micro processes and handoffs between these processes. When you start designing that, but the outcome of that, you suddenly start seeing, the amount of, I wouldn't use the word efficiency, the effectiveness of the process has improved 10x. You see that. So, and now, when you talk to a young CIO, like a 29-year-old, 30-year-old coder who's sitting with this set of teams, you never get an answer, ye kaise hoga? We'll do it. How much time you want? 15 days? We'll do it. There's always a tool. The challenge that I have is that I want to implement ERP, Oracle, or SAP. They said, no, don't implement. We'll develop something. We'll take an open source ERP and we'll convert that for ourselves. So that's a different thing. But That's the way where an experienced person, who's gone through the industry has to sit with them, get the reality dose, work very closely with them, and define. That's where a lot of time is spent. So in the new age industry, it's a very different thing. It's a very different set of solutions that you're working on. It's a very different set of business outcome, business impact that is you're working on. But all focused on delivering the outcome for the customer to whom you've committed something. Why we are doing that? Are we unique? No. Every other startup is doing that. If you're not ahead in this fight in somewhere or other creating this value, somebody will do it. Right? Tomorrow if there's a prime land where the charges needs to be set up and you didn't act fast and somebody decide that site went out, gone. It's not going to come to you for the next 4-5 years. So therefore you need to define the process, you need to define the outcome, and the most important thing, as I said, you need to define what business outcome are you trying to achieve with that. Once you are able to articulate that, then probably the process will take care of its own.
Thank you. Anyone else who'd want to just share driving dollars?
Sorry, just one more thing I forgot. Like Suparna started with a song, I thought that came, but it just didn't come. When John Lennon said, I imagine, and then Eminem says, let it come on, that's the kind of new age that we have to work it. Imagine and let it come on.
Thank you. But anyone who would want to share some thoughts? Because in capital-intensive businesses, the role of data has become very important. So you do precise targeting, you do precise decision-making, and the CFO's job become easy.
So I think, as I said earlier, that data mining is key. Something as simple as you being able to predict when is the product coming off for its end of life. How much of discounts are you giving? How are the discounts trending? Are you giving extra pay terms? Compare that with the competition. You cannot just look at internal data. My philosophy is, of course, I need to be a master of the data I'm generating, but what is my competition doing? I'm more worried about what my competition is doing, because internally, I have systems in place to kind of have focus and everybody working towards one particular goal. And I'm a firm believer of working with all my stakeholders, specifically HR, to design our pay structure and our incentive. So many companies have this problem that how do you get focus? The annual incentive takes care of it. I mean, we have some beautiful examples of how we structure it and blah, blah, blah. But using data to kind of generate insights specifically of what kind of products are coming up for end of life cycle. Secondly, all the products which I have sold, how is my customer using it? Are they using 100% of the features that it has to offer, or are they using 60? Chances are they're using only 60 or 70. Can I bring up a stripped down version of the same product at a much cheaper rate? How is my competition attacking it? Where do I have manufacturing? Because now, just in case inventories are more common than just in time inventories. So data is everything. Now the Suez Canal is again blocked. The Tesla factory in Germany can't ship out Teslas. So you have to be prepared for everything. That's why I said VUCA is a given thing. Bani is the new thing. It's brittle, it's anxious because I don't know what will happen. It's incomprehensible and non-linear. So data internally, data externally, reach out to everybody, specifically your sales guys. When I sit in our monthly review, I'm not interested about what deals we won. The sales guys have a habit of talking about, oh, we grew by X%. I said, great, wonderful. You'll get your bonus, I'll take care of it. Tell me what we lost and why. If it's pricing, we'll work on the pricing. We'll go and tell the customer, okay, this is at best what we can reduce, but if you give me a minimum guarantee, then I can look further. So there is an answer to every problem. First, identify the problem. Most of the meetings, which I go, are talking about how good things are. I'm not interested. I'm interested to know where is the problem.
Great to know. I think salespeople either sell soap or sell hope. What they miss out is identifying the problem. So I think that is what they should be focusing on. In the interest of time, we can take one question from the audience. Anyone would want to ask our esteemed panelists any question? Yes, please.
So all through the evening, it was a very, very interesting discussion. I rarely get to chance to join these conferences, but today I got a chance. So, but what I didn't find is nobody is talking about ethics, which is also going for a change. AI is bringing a lot of change in the ethical, and we are all professionals here. We are all chartered accountants or engineers or coming from a background. I think our ethics is going to for a good change with AI coming in, but there hasn't been any discussion around this. So I wanted to know from the panel any thoughts about how ethics will be changing with the change of this technology coming into the platform of finance.
Great question. I may just give some perspective on the data responsibility side, and maybe you can talk. I come from MasterCard, and data responsibility is the most important component as we talk about, because data belongs to the customer. The companies can only use the data if the customers give the consent. Having said that, some organizations are using the data without the consent, and there is a need to have a data responsibility framework which can talk about responsible use of data with insights, with the right ecosystem which has safety, security embedded. Today, a lot of organizations, when they want to come up with insights and use those insights for decision making, they have lawyers and data ombuds people. We use the word data ombuds people because they ensure that there are data regulations and guidelines without which data cannot be used for any insights. In Gen AI, as we generate more data, the same data principles are coming up so that everyone uses those very, very responsibly. And then there is an ethics committee which decides how this can be used. A lot of organizations can lose money only if someone sue them, which can happen if they do not use the data ethically or responsibly.
But there isn't any central framework that has come out yet.
So there is a DP principle, for example, Act in India. Yeah. Yes.
I guess the framework of driving the ethics in the organization. See, as a chartered accountant,
Yeah.
we talk about ethics, right? And ethics is a practice that we follow. But how much ethics has been driven into the artificial intelligence? After the usage of data.
So I'll just take an example. You are right. First of all, there is no framework as such. At least I have not come across, and it's a very vital thing. But let's take an example of what Amit said, extending it. When you call to a call center, the first thing that you hear is your voice will be recorded for training purpose. So that's an ethics thing. Though you are not going to use customer name for your data and analytics purpose, but still you are informing a customer that your voice and its textual translation will be recorded. Then one fine day, if customer says that I want to opt out of your ecosystem, whatever voice was recorded, that also should be wiped off from the system. Then again, this is ethics, that you would have a system which would then clean all the traces of digital footprints they had. So while there is no framework, but there are digital tools which are supplementing the ethics part of it. I just wanted to take one example to just explain.
So I think ethics, the whole definition is changing. While many people are scared that ethics to kind of track it is becoming more difficult, I believe that with digital footprint, it's becoming a lot more easier. But you need to be suave enough to be having technology to track it. I'll give you examples. Now with Concur, our TNL application, we built on bolt-ons, we built bolt-on, which give us a flag every time we see the spending pattern change. When they swipe a corporate card, if the MCC code is different, whether the sales guy has consistently met his quota or not met his quota. So the data which we mine every day is giving a heads up that there could be something wrong. So the flagging of any suspicious activity from either the data and more importantly the IT network monitoring. Where is the ping coming from? What is the IP address? Do you have a secure network? Do you deactivate the login IDs of folks who haven't used their, let's say, ERP or any other bolt-on application logins, if they're not used it for X number of days. So you have to work hard and be smart enough to be able to detect it. So it's easy, but it's not very, very practical unless you are focusing on it. So I don't agree that, ethics to track it and to monitor has become difficult. I think it's become very, very easy, but you need to have focus and tools to monitor it. And that's why the coordination between CFO and CIO is must. And lastly, I would say I believe in rotations. So the more you rotate people, especially in the sales side, the more you identify where a potential ethics problem could be. Every company has had some cases. There is no company, no industry which has been spared. So the more you rotate people and track how the revenue and the order pipeline is building up, you will get good insights.
Thank you very much.
One quick point on this. It's very important that the company, the foundation of a company is a trust charter. So once that is in place and it is preached properly to all the people, I think such issues can be avoided. Yes, yes, that's a very important. So then, it need not be a very defined framework always, but an undefined framework, a cultural change, trust charter to be in place. I think that can also do justice.
So great discussion. Just to conclude, identifying the pain points or the problems, keep the customers at the center. CIOs and the CFOs are two different sides of the same coin. They have to wear each other's hats. And today's world, ensure that the data and dollars will bring in long-term sustainability. With this amazing panels and amazing audience, thank you very, very much. It's been a great experience for all of us.
Thank you very much, panelists, for that timely dissemination of insights and embarking us on this journey of exploration and innovation together. I would request Mr. Amit to please extend this token of appreciation to all the panelists. Thank you very much. Thank you very much for being the great audience as well. Please clap for your own selves. Thank you very much. Can we please come together for a group picture?